Hey guys, it's Aman
And Christina
from
from
Our
Our
Rich
Rich
Journey.
Journey.
On today's video, we are talking about the craziness that is happening in the stock market right now. If you have been watching the market, you have seen the Dow Jones Industrial fall 1,000 points in one day only to recover the same day. You saw the NASDAQ fall 4% only to see bargain hunters swoop in and get those deals. You see, what is happening right now in the stock market has happened time and time again. And Christina and I have been investing in the stock market long enough to know that at moments like this, there are a great deal of opportunities and money to be made. And so what we want to talk about in this video is one particular investment. In fact, it's an ETF that we love at these prices and one that we are going to be making some moves on. And so in this video, we want to talk about that ETF, and we also want to give you guys some tips when investing in the stock market today.
So if you have been watching our channel, you know that we invest in a total stock market ETF, but that is not the focus of this video. Instead, what we want to talk about is a specific sector ETF that we're really excited about as the market is fluctuating with this volatility. But first, before we talk about that, we know that if you are watching your portfolio and constantly looking at it, there is a lot of volatility in your portfolio right now, probably. You're seeing ups and downs, and you may have paper losses as well. So we want to talk about how to react to that and how to really be a wise investor. And so we have a couple of tips that we want to go through first. So our first tip is to please try and avoid trying to time the market. When you are jumping in and out of the market, you can be missing very critical days where you could be growing your wealth. So Bank of America actually did a study, and they looked at the S&P 500 since 1930. And they looked at a hypothetical investor that invested in 1930 all the way up every single year until today. Now, if they would have missed the top 10 investment days every single decade, just 10 investment days per decade, up until today, they would have had a 28% return.
On the other hand, if you would have kept your money in the market during that same period, you would have received a 17,715% return. That is so powerful and a testament to why it is so important to stay the course. This impulse to want to time the market, to want to jump in and out when you think something is going to happen, it's impossible to plan. And anyone that does it usually gets subpar returns, like 28% over the past 80 years. Our next tip is follow the investment plan that you established before all this volatility took place. If you have a plan that you are sticking to before the stock market started going crazy, stick to your plan if nothing has changed about the reasons why you made that plan. You see, what typically happens is that people that invest without a plan, at times like this is a very dangerous period because they are flying by the seat of their pants. And usually what happens is they let emotions drive their decisions. And they panic sell and they jump in and out of the market. They do things because they haven't written down how they're going to handle situations just like this.
So we invest with a plan. We tell everyone else to invest with a plan. It can be very simple, but you really need to have a plan that is going to guide you throughout your entire investment life. Now, if you don't have a plan, you can check out our stock investing course. We go through everything about investing for financial independence, but then we also have a plan for you to fill out. It's a 19-page plan so that by the end of the course, you have a fully developed plan that will guide you throughout your investment life. If you are interested in learning more about the course, we'll leave a link in the description below, or you can just go to ourrichjourney.com.
Our next tip is don't worry about the paper losses that you are experiencing right now. You see, when you check your investment account, you see that your account may be down. Well, that's what we call paper losses. And those losses don't become real until you sell your investments at a loss. And so if you keep this in mind, you are better equipped to deal with the current volatility.
Our next tip is don't try to win back any money that you may have lost by gambling. And by gambling, we mean just taking a riskier approach than you normally would. A lot of times when people lose money, and we'll use Vegas as an example. If you're at the table, you lose all your money, sometimes you get so anxious that you want to win all that money back that you take riskier moves. You bet it all on one single number, one single color. You're trying to get your money back that you lost and then some. It can be very risky because not only do you lose the money you lost in the first place, but you also lose the subsequent money that you're trying to win back.
And this is a great point. We call this the gambler's mentality when it comes to investing in the stock market. And people that take on this gambler's mentality, there's a lot of desperation in this approach. What happens is you start to bet on individual stocks that you would have never considered in the past only because these stocks are the most volatile. And once again, you're trying to practice market timing, but in reality, you are gambling.
And our last tip before we get into our highlighted sector ETF is to really study the history of the stock market. If you look at the history of the stock market, all of the crashes that we've had before, all of the bear markets, all of the dips, all of the volatility in the stock market, you will see one repetitive outcome, which is that the stock market has always recovered and has always gone higher. Now, this is something that you really want to keep in mind. Now, we're not saying that the history of the stock market will predict the future of the stock market, but we are saying that for more than 100 years, the stock market has done the same thing. It has been volatile, it has crashed, and it has always recovered. So keeping this in mind will help you stay the course, will help you stick to your plan, and will help you to continue investing despite the volatility.
So please keep those tips in mind. But without further ado, let's reveal the ETF that we are so excited to be scooping up. And it is VGT, Vanguard Information Technology ETF. Now, this ETF is something that we've talked to you guys about before in the past. In fact, the first time we introduced it to you was in 2019. I don't think we were even retired at the time. But at that particular moment, a person that was also investing in VGT in 2019 has also experienced 120% return on it. And so VGT is one of those ETFs that we get really excited about when we see what it's doing now, which is correcting. So VGT is down almost 20% at the moment of this video. And so what we are seeing is a great opportunity to pick up a long-term investment on sale.
So for us, this constitutes a sale. When we see VGT and it drops by 10%, we think, wow, that's a good deal. If it drops by 20%, we're like, wow, this is an amazing deal, and we scoop up more of VGT. So how do we scoop up more? It's by continuing to invest in VGT during the drops. We're still investing the same amount into VGT, but because of VGT's drop, we're able to buy even more shares with the same amount of money. So we are going to break down VGT for you and explain everything about VGT, but first we want to focus on the returns because that's what makes VGT so powerful. So if you were an investor 10 years ago and you invested $10,000 into VGT and never put any more money into that investment, today that $10,000 would be worth $80,000. That is a huge return. If you think about if you had invested $100,000, it would be worth $800,000 today, close to $1 million. That is how powerful VGT is.
So the reason why VGT has had such tremendous returns is because it is an ETF, an exchange-traded fund that holds numerous companies, and these companies are technology companies. So within this one exchange-traded fund, you can own stock in over 360 companies. The top holdings include Apple, Microsoft, Nvidia, Visa, Adobe, MasterCard, Salesforce, Cisco.
So if you watch our videos, you know we are always focused also on fees in terms of our investments. So returns and also fees. So to own VGT, the expense ratio is 0.1%. And something interesting about VGT is that it also pays a dividend. So the yield on that is 0.61%. So let's look at the price range per share of VGT over the past 52 weeks. It's been going between $335 to $467 per share, but lately, because of the dips in the volatility, it's been trading around $390 to $400 per share.
So at this price range, we get so excited whenever we go in to buy more shares of VGT because we are getting a tremendous discount off of the 52-week high.
So in other words, like we have been saying, we see this as a great opportunity. VGT is currently on sale. But again, this is really our own personal portfolio. This is how we invest. You all have to make your own determinations as to what is best for you, and that includes doing research into what types of investments that you want to make. We hope that we've given you food for thought. We've given you things to think about in terms of VGT, other sector ETFs, and things you might want to invest in. So if you like this video, please remember to give us a thumbs up, subscribe to our channel, and join the journey.